But once we then see that this break of structure occurs here, you know you've got your next area of demand to look for, and this is where you could have got a trade to run for the next high. So this one concept, not only did it make me a profitable trader, it also made many of my students profitable as well. And I'm talking about the use of order flow with supply and demand zones. Now, you already may understand the use of supply and demand, been through that playlist in the channel, which we go through all the steps of supply and demand. But today we're going to talk more about using it for order flow and how it helps you to keep in the right bias of the market. Now, on the pound US dollar, on a daily time frame, we previously went through understanding those imbalances for order flow. But today we're going to use just mainly the supply and demand zones and how you'll be able to use this to find that order flow. And we're going to look at just this daily time frame, and we'll mark out those areas of supply and demand. And we'll start off with this high here, and you can see we've created this swing high. Okay, the market from there failed to go any higher, and then we've run eventually to the downside. So order flow with supply and demand. First, what about your supply and demand zones? So for supply and demand, when we see that move to the upside, a pullback, continuation, and this produces a break of structure, that is going to create the area of demand for us. So this would be your area of demand. You'll be drawing from that move to the upside. Now we also have, this is where we have the origin of the zone. We also have the rally, pullback, continuation, and this will be coming on this move here up, and that's also going to create an area here of demand, which is classed as the rally base rally. This is classed as the drop base rally, and this is the rally base rally. So that's our areas of demand we're going to look at today with the order flow. And the areas of supply, we're going to look at the drop base, okay, drop, which is the area of supply. This area here would be an area of supply, so drop base drop. And the main area we like to look at is going to be the rally base drop. Okay, so we drop down, pull back, there's your rally, there's your base, there's your drop, and this would be your area of supply. And we have here that break of structure to downside. Same here, you have that break of structure. So it's also understanding the structure in the market. And if you're not sure about how to apply structure correctly, there is a full playlist in this channel, and you'll be able to go through and check that out as well after this video. I'll leave it linked above now. And don't forget, we have that supply and demand playlist as well. So first off, let's mark off this as a swing high. You can see we only wick through this high. This is what we class as a liquidity sweep. So mark this off as a red level. This is where the market's sweeping through that high to find some orders, liquidity, to then push the market down. Now, again, there is a playlist in this channel that goes through liquidity, and I'll leave that linked above now for you to watch at a later point. But the thing we need to understand is when we see the market pushing up to this area, we have an internal break of structure here to the downside. And if we go closer into the market now, and let's just make this a structure break. And at this point, we see the market breaking up. Now, when we start seeing this movement down, we do have an area here of supply. We can start to draw. Price hold to this area of supply, and we drop out. So our first reversal of the order flow comes when we see the market breaking through this area of demand that we'd have here in the market. Okay, I'll push up and a reversal. Now, once we start seeing this, we then have the drop to downside. New area of supply we can draw would be here. And this is where we see the drop out, pull back, run the high of this candle, continuation down, leaving an area of imbalance there. So you have an area of supply there. Order flow continues to be bearish. Then you can look at using your structure as we break lower. Okay, we have a new candle I would mark off here as my order flow of supply. Now this time we can identify the market comes back into the area of supply. We haven't yet come back to test this. This is a fresh drop-based drop zone you can look at. Now the reason it's a drop-based drop, let's just quickly look at that. We have the market, we rally up, we base, we drop away. Okay, that is why it's a supply zone. And then we have this here is a drop base sideways movement there on that small bullish candle, and we drop back down. That is classed as your drop-based drop. This again is a break of structure. That's our origin. They are going to be your best zones to use this type of concept with order flow. And again, We push back down, eventually we run this low. But as we see the market dropping out, my next area of supply with order flow is here. You can see the market comes back into that supply. And look, we even have a nice looking sweep in the market right there where we can capture an entry. Now, as we push out of that supply, and this is the crucial part you need to understand with order flow, we're looking for the continuation from the supply. So we push into the supply, we push out. As we push out, that's our area of supply. And again, as we push out here, my area of supply, we can draw here. Now you can either mark that supply from where I've just marked it, or you can use the full high of the previous candle. I like to use that high. So we have the drop down, pull back into supply. And again, look, we drop out. We have a new supply I can draw. Again, right here. And this is the continuation. This is the order flow. We just zoom back a bit. You can see the market is dropping out. We continue to fall down here. We pull back, we then drop out, and the order flow starts. So the main area of order flow starts right here when we start to stack and you start to see the price comes back into these areas of supply. Now, these are going to be the best areas to be taking a trade coming back to that area of the origin move, and the order flow continues to be bearish. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. This is how we use the order flow with our supply and demand. There's no real order flow here because this was never tested. The order flow starts here and we start to be bearish. So this is your order flow, your origin. Now on the way down, we do create this drop-based drop area here of supply. And you have another drop-based drop area of supply created here. Now we do have order flow created here, but we haven't come back into this. And again, the market fails to pull back into that candle. Now, understanding supply and demand, we have different types, okay? We can have the range. This becomes a full range of supply, okay? And you have that pivot point where we have the swing high and we have the dropout on the one candle. That's your area of supply. And there is a final supply we can look at, which is the wick of that supply. I don't really like looking at those. I prefer to look at that range. Now, typically the range will be showing you a higher time frame pivot reversal, which is the one candle reversal of supply or demand. So if we just move forward with the chart from here, we can identify that price does come back to the order flow. So this is more of an internal order flow. Like we look at the internal structure, swing structure, and internal structure. And again, you can learn that inside that market structure playlist. We look at order flow to stack like this, and these are going to be the best areas to look for trade. Now you may be thinking, okay, we reversed there, but we never came back to this zone. Okay, this is the order flow where we start. We pump down, we continue to run off, and eventually we have a new order flow area we can mark there, and we just failed to come into that area now. But you can see the market does wick off there and pushes away. So we come into the order flow, drop, base, drop. Okay, so when we see this, this does create a new area of supply. So we can actually use this as our supply order flow. I hope you start to see what I mean by the stacking of it. So we come back to supply, we drop, base, drop out of the supply, come back into supply, and we drop out. Continuation order flow is there. And eventually, this is where we continue with the order flow. And this will be the area you really want to see the market come back to for the continuation of those flows. Now we can see we drop off quite heavily there. So we do have more order flow. Okay, here is a drop-based drop area. We don't quite come back to it. And eventually we break that structure. We have a new order flow. Starts here. Okay, so we drop, pull back, we go close it in. So the order flow at this point was to this area. And now it looks like we started a new order flow as we drop, bounce out, and we drop. So we have drop, base, drop, comes off this candle. We then pull back again into that supply, and I'll be marking this as a next area, and then eventually we drop out with this move here. So the order flow is very short-lived there. It's perhaps going to be more on the lower time frame, and we never come back to those areas. Okay, so we have this area of supply left over, and this one with this small order flow there. You could say we had this drop-based drop area that came back to that order flow there. Okay, but we never came back to this one, the origin of that order flow. But as we continue to break down, okay, and break that structure, you can identify where the new order flow starts, and that is that candle there. And this is why you can then look back where prices are moving from, and you can start to draw out that order flow. That's why I just wanted to show you that. Okay, this is where the order flow continues to be bearish. And again, from here, okay, we keep pushing out, pulling back until eventually that's your last push out. So that's that order flow there. As we push down, okay, we have another break of structure. This is why you can use the conjunction with break of structure and the order flow. There is an order flow area that starts here, but with supply and demand, once we push through the high, it has removed that area. So this gets removed. And what's happening is the market pushes down once again. We do create an area of supply. We don't quite come back into it. So we drop down, pull back, we drop down again. There's a new supply I would mark. Now we have a potential start of order flow again. So the market is pushed out of this area to start with, pushed down. We have a drop-based drop area there, pull back again, lower high, and eventually we drop back out. New area of supply. So the market doesn't come back to that zone again. We continue to push down. So this was a short-lived area. We have this drop-based drop. We never come back to it. And then eventually we have another drop-based drop again. Here, this time it is a structure break. This becomes a new area of supply. And we do come back into that supply this time. But at this point, we shift the structure back bullish. And as we do this, we can identify where the market starts to create this bullish order flow with demand. Because we have this push up here, okay, a retest here, another push up there, and eventually this is our last area of demand as we push out. So we could look for demand come back, price come back into this demand, but we don't do this. And what's actually happened instead is this is the start of the next move up as we break structure. Now we just failed to test it fully there, came back in here. And in fact, we even use this once again. So sometimes you'll find a demand will hold price on several occasions. So we have that pulling back once, twice, three times. When we break up from there, you can create the new area of demand for your order flow. Price doesn't come back. Okay, so we're not always going to see it stacking as nicely as we did back here. So when we see price stacking the orders like this, with area supply, these are the markets that are going to be really trending nicely, respecting those areas, and they are the trades here you want to be catching, because you can run for the lows every time and you know the market will continue there when we start respecting that order flow. When we see these larger drops down like this and we don't have the respect of the order flow, you're going to find it hard to find trades on that time frame. And what you need to do is either go up or down a time frame to find the order flow. Where now on this sort of movement, it's going to be the lower time frame, looking for that order flow to continue to look for those trades. Now, when the market starts to do this, nice order flow, we can continue to buy. Then eventually we can see a respect here, push up, we failed to push higher. We come back and the market comes back to the same order flow area. And then we push out. And we do have the next rally base rally zone is here, and you can see eventually price comes back to it. But on the way up from there, we do have the order flow starting to stack. Okay, so we can start to see the order flow here is starting to hold. We come deeper into that area once again. Now there is a smaller area where we have this push out. Let me just look. We have a push out here, where the market continues to hold, and a small one there, and then eventually that order flow gets shifted bearish, but into this larger area of demand, and eventually we shift back bullish again. And as we push out of this demand, we can start to mark up that bullish order flow again. So you can see the market here pushes out, pulls back in again, and again, the bullish order flow starts to push away again. Okay, so at this point, this is where the market comes back into that bullish order flow and we reverse, okay, bearish hair of that order flow. So this is our bearish reversal, market out of supply, and eventually the market continues down. Now we don't have the continuation for a nice order flow there. So this is more of a deeper retracement back to this demand. But we're not going to know that until you see the reversal. So this is your areas of supply, but we're not holding on to those areas until we get to this area here and we have the push out. Okay, so you can see that this is the start of the new bullish order flow again. And in fact, let me just grab the box. This starts right there. Demand. So you can see how we've basically now gone from that bearish movement, bullish, starting to hold, order flow, reverse bearish. There's no real order flow there. We just a strong push to downside into the demand, and then we push back out bullish. And that's where the order flow has started bullish again. And we can mark that off. We can see we start to hold, but then straight away, the market doesn't really come back and we just push away. So then we can start to mark off the next retest of demand. We continue away. Okay, you can see how the market pushes away there, comes back into the demand, and the order flow for bullish order flow starts all over again. And eventually, even here, that we hold at this point, we have another push away from the order flow and we reversed it. So you can see how the market was bullish and then we reverse bearish, and that starts by this move here to be supply. And you can see the market comes back into supply. We drop back out. The order flow now shifts back to bearish. We just failed to come in there. Okay, the market did reverse eventually. Okay, going back bullish. Now we can look at these areas to the left. Did price come back into any of these areas? We didn't quite get into that area, and this one got pushed through. So we have to wait to see if the market's going to shift that structure and that order flow. Now we do shift bullish here, and we can start to look at those areas of demand where price is coming from. We don't have any order flow really here. This is then the next area. Now we do retest, push away, creates a new bullish demand. We just failed to come back into it again. Okay, and then eventually the market's pushed away and we've just come back and tested. So this could be now the start of a bullish order flow. We've just had really a retracement here. There is a shift in order flow as we push through here. We come back, retest into supply, and we drop lower. Then we come back and push back through, and we push through structure once again, and eventually we come back. So what we're now looking at is as the market pushes away from here, we start to create new areas of demand. So what you'll be looking for is that we break structure here to the upside once again, and then the market, as we break out, we look for that pullback again to demand that we saw here, continuation. So unfortunately, this is actually coming back into the imbalance order flow, but that's on a previous video in this playlist, and you can go back and watch that, the first video. This is more just to show you how you can apply the supply and demand as order flow, just like you can the imbalance. Now, both will work well. Perhaps one works better for you, but when you start to find these areas where they start to stack like this, okay, even this area here, we start to stack. Here we start to stack price, this bit here more. And again, we start to stack as we push out. And then eventually you can see we have some stacking of bullish order flow here to bearish. And then we have some bullish order flow, more bullish order flow. And you start to look for that direction with that order flow. So right now we'll be looking just to buy this market on the daily time frame of the pound. We're looking for the continuation to push through this high, to break structure, and then the pullback to the continuation of the bullish order flow. Now, not saying you're always going to capture those trades, because if you're waiting for price to come back to this area of demand, we could just push up, pull back into an area here of imbalance, then push away. But then you start to mark out again your new area of demand, looking for the pullback for the continuation of that order flow. Now we can see that happening here. We have a drop, we have an area of supply, another area of supply. We reverse the supply. I'll just show you. Let me just take rid of this. This is how you read those reversals. When we see this drop-based drop area here of supply getting reversed by this bullish move, you're looking for price then to come back into the demand. So you're looking for the breakthrough, pullback, for continuation. That's where your order flow is expected to continue. Now, it didn't happen. And what happened? We had a rally drop. Okay, we had a sweep happening right there, break of structure there, creating this area of demand. And you can identify as the market reversed, my pen reverses here, we have a quick pullback into the demand, continuation. And this is where you're looking for price now to pull back to this demand. So you're not always going to capture trades, and how to find those profitable trades, especially when you start to combine the use of structure, imbalances, and supply and demand for order flow. This will give you a much better win rate. It's going to give you much more confidence in the market. And especially if you're a struggling trader, I do suggest that you go back and watch this video a few times. It's going to help you to understand why order flow matters in the market. Now, if you want to take your supply and demand training further, I do suggest checking out the Profit Trade Workshop. Now, there will be a link popping up in the moment for that, but make sure you continue watching the next video in this playlist with understanding order flow. And again, it's going to be with market structure. If it isn't released yet, go back and watch one of those previous playlists I suggested at the beginning of this video.